Hello.
Hello, world.
We're just arguing about waffling. This month we thought we might do a bit of a video summary of our Ben's Barometer. So I know that a few of you out there read it. We've dressed for the occasion, normally in our hoodie as of lockdown Wednesday. But yeah, we're talking to lots of people out in the market, lots of you working still, which is super, and some of you sitting at home just ready to chew the fat. And the number one question that we're being faced with, of course, to be expected, is how is the current situation going to affect the market? We haven't been through any of this before, but we've made some educated guesses about it for this month, and I'll hand over to Ben.
Yeah, I guess there's a few things that can happen. So obviously fear is a big thing for the market, and there's the real fear, which obviously is the COVID-19, which is out there at the moment, and the health concerns around that. People's fear for jobs and employment, and that's a real thing as well. And then there's perceived fear, which is, the world will come to an end at some point and things will never revert back to some sense of normality. The first one is real, the other is just perceived. The world will get back into some sense of normality at some stage, and there will be things, and human beings are optimistic, so we will look positively into the future as well. So things will be okay once we get past it. We also talked about stock levels. So prior to going into the market, there wasn't a lot of real estate out there for people to buy, and this situation isn't going to change that. Wouldn't you agree? I mean, we had a shortage anyway. There wasn't a lot of real estate coming to the market prior to this happening.
Quite interesting, what we did see pre-lockdown was a bit of a rush of stock. So we went and had 8 listings rush to the market prior to the lockdown. And also buyers looking to transact on those properties, people that have been in the market searching, hoping to secure a property before we went into full lockdown. So that was quite an interesting observation, but pretty much since then we're sitting around.
Yeah, look, people will have to move on at some point. Things, we grow families, people downsize, upsize, all those things are going to happen again once we come out of it.
And the motives for a lot of people haven't changed. First home buyers are still going to want to get on the property ladder. Families are still going to need bigger homes. Perhaps people that were looking to put invest in property might not, because they might have had their capital reduced, but also on the flip side, they might because they may see it as a safer, longer term option than stocks, which who knows when will come back at the moment.
Yeah, and obviously the Reserve Bank made some changes to the OCR, so interest rate levels are really low, so that may look, property investment, as Amanda mentioned, may come back into favour as well. But we talked a little bit about the investment side of it, and Amanda touched on that, stock levels. So a lot of first-home buyers for the first time, or people that have been involved in KiwiSaver, have experienced loss aversion, which means their accounts, which they've been probably looking at for the last 5 years, going up all the time and been pretty happy with that. Now they're starting to see a little bit of negative movement. So that could have some impact on what people could afford to do in terms of their deposit level and buying real estate going forward, which may impact the whole chain of events from, first home, upsize, downsize as we go through as well.
Yeah, because obviously if first home buyers aren't as active or that pool decreases, then less people are going to be able to move out of their first home and onto their family home. And we did see that back when the Reserve Bank changed the LVR levels from 10% to 20% back in 2013. And it took about a year for that to recover by the time people kind of saved back that another 10% deposit. So that's something that we can kind of draw comparisons from in that area. Obviously, we've noticed a short and sharp fall in the property market, and that was to be expected. One of the markets we might be able to draw some type of comparison from back in 2003 was when SARS was rampant through Asia, and in particularly Hong Kong. Same kind of thing, a very short, sharp decline until people kind of came back out of that. And what we do know from history is generally the property market is one of the last markets to go into a recession and one of the first to kind of regain those levels. Just how long it takes to regain those levels is anyone's best guess. But they did see in Hong Kong, and it kind of took about 6 to 12 months to regain those, and then they were back to like a similar activity as they were the pre-SARS epidemic. What some of the things that we might notice as a result of this is all those listings that I said we kind of rushed to the market pre-shutdown, we brought on with floor plans, virtual tours, videos, to allow people to engage with our properties better from home. That's something we do not always want to do. Giving too much people or the ability to discount a property and not come and see it in person is not always the best case scenario, but we wanted to protect our vendors' assets while we were under lockdown. what we might notice is a real demand from the buyers to view properties in that way as a norm going forward. And also as social distancing or people's paranoia about being in close proximity to other people, is still around, we may see, more private inspections. And I mean, who even knows when the good old handshake with your real estate agent
You're
will
allowed to put your
even
hands in your
return.
pockets. and
Who
keep
knows
them
when
there.
we will, if we will ever go back to normal patterns of interaction, or at least for the kind
It'll
of
take a
foreseeable
while. I mean, it's
future.
been ingrained. We also talk about one-trick pony towns, and what I mean by that, I big fan of Wellington real estate, and the main reason behind that is we're somewhat protected and insulated from the macro market because the government's in town and they employ a lot of people through the public sector. We've got a couple of universities, and those things tend to tune over no matter what kind of market you're in there's activity. But I mean, if you're looking at somewhere down like in Queenstown, it's going to be very difficult where their economy's based on construction tourism. And we've pretty much just had the rug pulled out from the international tourism, so mostly domestic, but be very difficult in some of those towns that just rely on sole industries to push forward from there.
And a huge Airbnb market as well, and developments built purely for the Airbnb market. I know Ngāi Tahu is doing a massive development quite close to the centre of town, and that's been on the cards for so long. But with the seasonal workforce going home, who is there to fill those, and who can justify what possibly they base that development price on, once the rental market's gone down in Queenstown. So we just don't know there. So that's us kind of for now. We're looking forward to bringing you a few more updates and answering any key questions. So let us know if there's something that we can touch on. We'd be very happy to. For the kids, we have our annual colouring competition, the Easter one. It's been very popular this year, unsurprisingly. If you'd like your entry, you've got till Wednesday, close of business for your kids. Let me know.
Have you shown the prize?
Oh, the prize pack. Email amanda@benstevens.co.nz. We've got 4 age groups: kindy, year 1, year 2, year 3, year 4, and year 5, year 6. And for anyone who wants to do a kind of market appraisal of their home, we can do all those things virtually. So give us a call. If you just want to chat, let's chat. We've got a bit of time.
All right. Might go and make some sourdough.
Okay, bye guys.